All right, let's get right into it. Today, we're looking at the wild world of commodities as we head into 2026. You see, the ground is shifting under our feet, economically speaking, and it's creating this massive split between the assets we've trusted for centuries. So what's really next for gold, silver, and oil? I mean, this is the big question, isn't it? You look around, there's uncertainty everywhere, and you start to wonder, where do I even put my money to keep it safe? It's what everyone, from big-time investors to everyday savers, is trying to figure out. And the answer, well, it starts with understanding one key idea. You hear this word tossed around all the time, volatility. So what is it? Honestly, it's just a fancy way of saying risk. Think of it like a roller coaster. The bigger the ups and downs, the more volatile it is. And right now, the whole global economy is on a pretty wild ride, fueling all this risk. And what's causing all this? It's a vicious cycle, really. You've got inflation that just refuses to go away, a feeling we know all too well right here in Pakistan. That forces governments to spend more, which racks up more debt. You mix all that financial stress with global tensions, and bam, you've got a perfect storm that sends people running towards certain safe assets and away from others. So, all this chaos leads us down our first path. While everything else seems shaky, people are flocking back to the classics, precious metals. In a world looking for an anchor, things like gold and silver are stepping back into the spotlight, reminding everyone why they've been trusted for thousands of years. Now, it's super important to get this. Gold's rise isn't just some random market hype. No, this is built on solid, fundamental reasons. You've got that stubborn inflation, massive government spending, and a US dollar that's looking a little less mighty. But the real story, the one you absolutely need to watch, is something called strong structural demand. And what do we mean by structural demand? We're talking about the biggest players in the world, central banks. Just look at this chart. They aren't just buying a little gold here and there. They are buying it up at a staggering pace, and that pace has accelerated like crazy. This isn't just a trend. It's a massive, long-term strategic shift. And this quote right here just nails it. It says, this isn't reactive buying, it's a redefinition of reserve strategy. So what's that mean in plain English? It means major countries are fundamentally changing the rules of the game. They're moving away from relying only on the US dollar and are strategically beefing up their reserves with physical gold. Okay, now let's talk about gold's more exciting younger sibling, silver. Silver's story is fascinating because it's basically living a double life. On one hand, it's a safe haven asset, just like gold. But on the other hand, it's absolutely essential for building all the technology that's shaping our future. And this incredible demand from both sides has created a huge problem. For 5 straight years, the world has used more silver than we've been able to mine. Let that sink in. This isn't a temporary hiccup. This is a massive structural imbalance in the market. And where is all this silver going? Well, look around you. It's in the solar panels on rooftops, it's inside every electric vehicle, and it's powering the massive data centers that run AI and 5G networks. The key thing here is that this demand isn't just growing steadily, it's accelerating and fast. So, with these powerful forces at play, you're probably wondering about the price. Now look, nobody has a crystal ball, but some of the forecasts out there are pretty eye-popping. We're seeing analysts suggest gold could hit $5,000 and silver could even target $100 by the end of 2026. Now, those are not guarantees, but they show you just how powerful these trends could be. Okay, so that's the story for precious metals. It's a pretty bullish picture, but now we have to pivot and talk about the other side of this great divergence. Because while metals are climbing, the world's most important energy source, oil, is facing a totally different reality. Honestly, these two images tell the entire story of 2026. On one side, you've got this beautiful, steady upward climb. That represents what's happening with precious metals. And on the other side, a choppy, volatile mess that's struggling to stay up. That's the story for oil. This is the Great Divergence, captured perfectly in one visual. So, what is going on with oil? It all comes down to the most basic rule in economics, supply and demand. And right now, the scales are way off balance. There is just too much oil flooding the market, while the global economy's thirst for it is starting to slow down. And to put a number on that, check this out. According to JP Morgan, supply from producers outside of OPEC is growing 3 times faster than global demand. 3 times! That is a massive oversupply, and it's putting relentless downward pressure on prices. And you know, this isn't some fringe theory. It's what all the major analysts on Wall Street are seeing. The consensus forecast shows that they expect both Brent and WTI crude to be trading significantly lower in 2026 than in 2025. The market is basically pricing in this weaker, oversupplied environment. So that's the big global picture. Metals are up, oil is down. But let's bring it all back home. How does this great split between shiny metals and black gold actually affect us right here in Pakistan? Let's break down why you should care. So if we boil it all down, here are the three big takeaways. Gold is playing defense. It's a strategic tool to protect your wealth. Silver is playing both defense and offense, offering safety plus a piece of the high-tech future. And oil? Well, it's stuck in a supply glut that's likely to keep a lid on prices.
And here is the so what for us locally. For anyone in Pakistan, a rising global gold price can be a powerful shield, helping to protect your hard-earned savings from local inflation and a devaluing currency. At the very same time, lower global oil prices could mean real relief for the domestic economy, maybe lower prices at the petrol pump and a break on our electricity bills.
And that really leaves us with one final big question. We're watching this historic split play out in real time. On one side, you have the timeless safety of precious metals. On the other, the changing, complex reality of energy. The key to navigating the economy of 2026 is figuring out, how do you balance the two?